Hey everybody, this is Ryan Mallory, and today I'm going to talk to you guys about some of my better trade setups so far this year. It doesn't necessarily mean they gave me the biggest gains, but they provided me a quality trade setup with a quality return in the way that I managed them. I was pretty happy about, and so let's go ahead and dive right into them. The first one's going to be Alibaba, symbol is BABA, and then the second one is going to be ROKU, ROKU. Now you notice I'm wearing my UCF shirt. It's March Madness. They're going to get out of the first round. They're probably the underdogs for that, but the second round they're probably going to get slaughtered by Duke. So, you know, I gotta wear the shirt while I can and represent them as an alumni there. So, hey, let's admit if they don't win it, we'll just hoist up another championship banner anyways for basketball because we can get away with that. All right, so let's go ahead and get into Baba here, okay? Alibaba. So I got in on February 12th. So let's pull that up here. It comes down to this little candle right there, right? And actually, when I got into it, it was above the 200-day moving average at 169.96. However, it didn't really perform well for me going into the close. It came back down and closed below that 200-day moving average at the close. So that was a little bit disappointing. But what really attracted me to this stock was this double bottom pattern that you had here. So you had a bottom here, and then you had another bottom here. You could almost say it's a triple bottom, but I feel like you can group these two tests together as just one single bottoming pattern there. And then it took off. So then, look at this. You had this breakout level here, and this is what drew me to the stock. Okay, you had a push that above the breakout level, and then it came back down a little bit and then reclaimed it. So I really like this, and I had stayed away from Alibaba for almost a year with my trading because last year I just really was not reading the chart very well, and so I decided that with it being one of the worst performing stocks that I was trading at that time, to go and take a break from it and just come back to it maybe the following year. And I did that, and it gave me a little bit of a fresh perspective on it. I didn't feel the frustrations that I had felt with 5 or 6 losing trades in a row on that stock. And so sometimes time away can really help you with your trading perspective if you're not doing well with a certain kind of stock. So this one, it was a little bit of a patience. I was like, man, I think I'm going to lose on this thing again, because you had on the 15th this sell-off, and I was like, man, it's getting closer to my stop loss. I had my stop loss below the lows from 2.8 on February 8th, so we'll put my stop right there. It didn't get hit, and then it bounced, and you can see it took us back above the 200-day moving average, and then just like rifled higher there. So I sold it on 225 at 183.29. So 225 would take me up to right here. And I didn't hold it any longer. You can see the next couple of days, actually the following day, I felt pretty good about it when it opened up and it was way down into the gap. It's like, all right, made a good decision there, and then it just rocketed back higher. I wasn't in it anymore, okay? So kind of getting, you know, seller's remorse, getting rid of the stock. But hey, look, that's gonna happen when you trade. Stock's gonna go up or down when you get out of a stock. Reason why you sell is because the risk of holding it any longer isn't worth it for the reward that you're trying to seek. At this point, I felt like it was a good idea to get out of the stock. And you can look at it now. I mean, it's had a couple of days of selling in March that wasn't too kind to the stock, and then it's just been at 180 ever since. So I made the right decision. I got out of it at a good time, and I came away with the lion's share of the gains. So I really like this. On this particular trade, I made about 7.8% on the trade. Had I held it a couple days longer, yeah, I could have probably gotten up to about 9 or 10% there. But overall, I was very pleased with this trade, how I handled it, where I got out at. It was a beautiful double bottom chart setup. It had a little bit of consolidation here at the 200-day moving average, and it broke out eventually, right? So let's look at ROKU now. So I was a little bit nervous because I had been following this stock quite a bit over the years, and I never really pulled the trigger too many times on it. But when I did, I knew that it can be a pretty wild ride. So this one was back here on January 30th. I got into it, okay? Right here on this down day. No, I'm sorry, the following day after the down day. So you had this down day, and then you had a little pop up above resistance. So I'm going to draw this line for you here so you can see exactly what I'm talking about. So it breaks above this resistance level here. And it just starts climbing right away. And this was a pretty quick trade here. So this was a pure momentum play. There wasn't like the consolidation that you had with the Alibaba trade that I just talked about, where it kind of went sideways for a few days. This thing shot out right out of the gate. And you did have some late day fades, which was a little bit frustrating at times. However, I got out about 4 days later on February 4th on this huge candle here. I got out at 49.38. So I got out almost right at those highs there, and then it gave up a whole lot of profit going into the close. So the big thing there was continuing to increase my stop loss as the trade wore on. When I pull up the 30-minute chart here, and I'm gonna have to scroll all the way back to January 30th. Okay, so we had this big move right here on the 4th, right? Big move. And then I got out at 49.38. And that was right here on this candle here. So what I had done was put my stop loss right around the lows of February 4th. And then I went ahead and just got out. There was a little bit of a pop that gave me a decent stop loss exit on that particular trade. But it was really good trade. This run here was fantastic. I think it was like a 10% run or so that we got in one day, or close to it. And I made about 13.2% on the trade. So that was one of my finer trades of the year, just from a pure profit standpoint. And you can see the 30-minute pattern of this chart is even more spectacular when you look at it, because you can see even more resistance here, and again here, and then you have it all over the place there. And then when we get into it on the 30th, it bear flag or bull flags just a little bit there, and then it just shoots off, and then we take our gains quickly. So why did I not hold it longer, right? Well, you could definitely make that case. The stock's gone really high ever since I've gotten out of it. So I got out at 49.38. It's at 67.49. Again, it goes back to the premise of stocks are going to go up or down when you get out of it. What you're doing is based off of what you can tell in the short term. As a trader, does it make sense to continue holding it any longer versus the amount of reward you can get versus the risk that you're taking on? At this time, I didn't think that it was. It went way up. I got out of the game. I got out of the trade with some decent gains near the top of that day's move. What I probably should have done is watched it a little bit more. I like this coil here a little bit, and I considered it at the time. Should I get into this trade? That it's coiling, but I wanted it to coil for a couple more days. Give it a little bit more consolidation, because it had just made a pretty significant move off of the 30s all the way up to the $50 level. I wanted it to digest those gains a little bit, but it didn't. It just took right off, had its earnings, boom, it goes crazy. Can't really do much about that. So in any case, 2 trade setups, made some solid profits out of it. Yeah, as traders, and even in these videos, I kind of go over the what ifs, or why didn't I do this, or why didn't I not do that. But overall, there are 2 solid trades. They're going to that kind of risk management is going to make you good money in the future. And in all your trades that you do, the key is manage the risk. When the trade becomes more risk than reward, that's when you want to get out of it. I hope you enjoyed the video. Thank you. God bless. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/